All right. Good morning, good evening, good afternoon, wherever you are. Thank you for those who are live. Today we are going to look into the future trading. For those who don't know me, my name is Wilfred Were. I'm actually a business developer for Gates. Today I'll actually be talking about future trading, future trading, and risk management. For those who don't know more about risk management, this is actually one of the trading strategies that we normally use while trading futures. Basically, you need to understand what future trading is. Remember, future trading is just like the other trading, is also one of the trade that we normally undertake onto these exchanges. And to this stream, I'll using Getayo as our reference exchanges, though this is actually applicable for any other exchanges that you might be using. Just to remind you that in case you haven't opened your Getayo account, you can actually click on the link to the description. You'll actually find to open your Getayo account. I'll navigating deeper into how you can trade all these different coins and risk management strategy you need to apply while trading future trading. I'll showcasing by use of both Android and desktop, right? So you just need to be familiar with that. And just to remind you that the stream will last for the next 1 hour. So in the next 1 hour, we shall be closing up. So basically, you need to understand what future trading is. And future trading, this is actually the financial contracts, and it allows you to buy or sell an asset at a predetermined price at a future date. So basically, future trading, you have two types of future trading. There's actually, we have perpetual futures, we have delivery futures. For this case, we are going to merge into delivery futures, perpetual futures, because these are the features that the trades that you normally undertake on a daily basis. I'll actually be showing you how you can do this onto your Getayo account, and also how you can manage all this risk, how you can end a signal. Sometimes I normally share with some of you. I'll showcasing you all these. So in crypto, you are not buying the asset, so you are speculating on its price movement, so up or down, right? So you can go long, actually, that is buy, or short, that is sell, to profit in both bull or bear market. So future trading is a type of trade that allows you to benefit in both direction, unlike spot trading where you are only waiting for the market to rise for you to benefit. Future trading gives you an option whereby in case market goes up, you can actually anticipate that market is going to rise, then you place an order to buy. In case it happens that market actually drops, then you can still choose to short the market, actually placing a sell or a short order. So basically, these are a very good example of trade. A lot of you, maybe you might be anticipating to be trading this future trading, but you don't have skills on how to do this. So today I'll actually be going much deeper on how you can navigate all these. So if you believe Bitcoin will rise, then it means you'll long it. So if it drops, then it means you short it. So you'll profit in either direction. That is actually an example, or a good example, of future trading. Basically, I know some of you, maybe you might be new here, and just to remind you that future trading is a advanced trade. So in case you are new here, you need to start from opening your account. That is the first thing you need to do. The second thing, you need to understand how you can actually now fund your account, and also how you can withdraw. That is actually the best way to do this is by peer-to-peer trading, right? Which I have already covered. When you actually look onto our previous video that we have covered how to do peer-to-peer trading. This is basically how you can deposit and how you can withdraw. Also, I have done some few tutorials on how to do spot trading. You can also go through how to do spot trading. Maybe to illustrate on spot trading is basically you're exchanging one coin against the other. So it is a simple form of conversion, right? So in case you don't know that, that is it. So future trading now is actually advanced trade, whereby now you choose either to buy or sell the coin, right? And it gives you all these options. why do you need or to trade future trading, or why do you need to trade futures? So this one, you profit from market drops or pumps. So in case it happens that market actually is dropping, you can place a sell order and you will benefit. In case your market is actually pumping, you can place a buy order and still you can benefit from it. These are one of the advantage of future trading that maybe most traders don't know or they don't have an idea about. Another thing, it allows you to use a leverage to control large position with a small amount. Let me say you are having $100. So future trading gives you a leverage. A leverage is whereby now an exchange gives you, you can actually multiply the funds you're having. Let me say maybe by 10 times of what you're having. Let me say you are using $10, you can use a leverage of 10. So in normal case now, for that case, you'll be using $1,000, right? So that is what a leverage is, and that is the advantage of future trading. So in case you have a small fund or a small amount, you can still leverage your amount to be trading with a large amount. Another thing is that it trading 24-hour trading, 24/7 tradings. So in future, crypto never sleeps. So you find we have sometimes market goes up, sometimes market drops. So all these you can apply on future. So anytime you can trade future, right? Be it on weekend, be it on weekdays, market is always there. Another thing is that no need to own the asset, pure speculation. This is another advantage. But it has a high risk, but it has a high rewards and come with a high risk. So basically anything that has a high rewards, it has a high risk. So you need to know what are some of the risks that are actually associated with this future trading before you start trading. All right, that is it. Risk management is one of the key areas, the key area that you need to actually put much focus onto, because as much as you are aiming big, remember you can also lose within a very short period of time. You can win within a very short period of time, but that now will actually depend you on how what are you doing, or what are you putting into place. So the first rule, or the rule number one while doing this future trading, you need to know that trading without risk management is actually gambling with the beta graphics. So you know, you're trading, but you need to differentiate now between trading and gambling. So in case you are just having a trade, you're just anticipating the price will actually be rising, then you place a short without considering any risk management, then that is not a trade, by the way. That is actually a gamble, the way I normally see a lot of people do. So you need to understand that before you enter trade, you need to have a better risk management. And the key risk management strategy we'll actually have to talk about today. We'll talk about how to use stop loss, right? And also you need to know the risk reward ratio, how to calculate the risk reward ratio, that is, and also how to control your leverage. Position sizing is also a matter of factor that we'll actually get to know about this. Then I'll actually get you through a live demo, actually live trading. I have a demo account that we'll actually use. You see how you can practice before you venture into the actual trading. All that is actually going to be covered. Okay. Having covered that, I think that is for some few slides that I've actually prepared. Alright, so these are actually the rules you need to know, is that while trading without risk is gambling with beta graphics. So here is how it protects your profit. So first of all, you need to use stop loss every time. Before you actually open a trade on future, make sure you have set your stop loss and your take profit, right? Stop loss is the major key, because in futures you can get liquidated anytime, because price moves at a very high speed. Remember, when a price hits your stop loss, you are losing in that case as well. But now for this case, you have set a stop loss whereby in case even it got hit, you have a idea that it can hit it, right? And you won't lose a lot or all of your fund. So when you enter into future trade without setting your stop loss, sometimes we normally call it liquidation, right? So liquidation will get you in the process, and whenever liquidation happens, it means you will lose all your funds. And sometimes you have very coins that are very volatile, so you find you losing your fund within a very short period of time. Just find your account is empty. So that's actually one of the risks that a lot of people normally undergo, or you might end up losing your entire fund in future. So you need to understand that. So before you enter trade, you need to know how to set your stop loss every time. Another thing, you need to know risk to reward ratio. So as much as you're trading futures, you need to know, like, I'm risking my $50, right? What am I targeting, right? So your reward or your target must be higher than your risk or your loss in case the trade goes against you. So never go all in. So for this case, we normally say invest what you're ready to lose. Always, that is the say for the crypto: invest what you are ready to lose, because sometimes don't go beyond what you cannot afford to sustain in case it goes against you. Because unto anything that is good, we have negative part of it, of which most trader fails to actually anticipate that, or have that in mind. As much as you are actually targeting big rewards, there is a possibility of you also losing. And now how to handle that is only through risk management strategy. Okay, having covered that, I think I'll take you through through the exchange, how you can actually demonstrate how you can do that practically. And this is actually, I'll using Getayo for these illustration purposes. So for this case, Getayo is one of the amazing exchange that you can use onto your daily trading activities. It's one of the major exchanges that I normally use for trading. In case you like your exchanges, that is all. I like this, actually my personal view. Basically, this is the website, how it looks like. In case you don't have Getayo account, you can as well open your Getayo account by using the link that I've just put into the description button. So this is actually how Getayo accounts looks like. And for this account, just as you can see, when you log in or you open your account at the first time, this is actually the interface. This, you can see Getayo, this is the interface, and it brings you to this interface. And to this interface, you have an option where you can buy, you can sell, you can sell, you can as well do on-chain deposit and all that. So I think maybe for the illustration of how to deposit, because the procedure into trading, it doesn't happen in a day. So as I mentioned earlier, I have already covered on how to do deposit by peer-to-peer trading. I have done how you can do deposit or how you can do spot trading, because this is the procedure. Open your account. After opening your account, learn how to deposit, that is peer-to-peer trading, and learn how to withdraw as well. Then after learning how to deposit and withdraw, understand how to do conversion. That is actually converting from one coin to another. After understanding how to do converting, what else? You need also to understand now how to do, maybe you want to withdraw to on-chain deposit, you want to transfer your funds maybe from Getayo to another exchange like maybe OKX, you need to understand how you can do all that. So from there, now you need to go much extra deeper, where you call it advanced trading, like feature trading. From feature trading, you can also learn how to do now copy trading, which is actually you're just copying whatever the active traders are doing, right? Or rather the experts. So right in here, you can see while you log into your account, this is the interface it normally displays. So it displays this interface. Right in here, you can see buy crypto, and under buy crypto, you can actually get to see, you can buy by use of quick buy. We have buy crypto, with card and more via Get Connects. You can also buy with card. You can buy using P2P. Actually, P2P trading, these are free, and it is the best way you can actually trade crypto. Basically this is just a fiat gateway. Like you have a friend who has crypto and you want to buy, that means you can actually buy with them by use of peer-to-peer trading. Okay. As well, you can actually get to see here markets, trades. Here you can see you have spot trading, the one I've been talking about. You also have pre-market, where you can actually get access to the coins that are before they get listed. As well, you have margin convert function, which is actually the simple form of spot trading. Remember, spot trading is just converting one coin to another. So as well, you can use spot trading. You also have copy trading, and you also have bots. So some of you, some people normally tells you, I can sell you my bot. So as well, these bots are already here, so you can actually get it to use the bots that are already here. I think I can actually adjust my screen. Let me adjust it to full screen. Okay. All right, that is it. So basically for this trade, for this we are going to look about how to do future trading. Now future trading, we said you benefit as the market goes in either direction, either it is buying or actually selling. You can use future trading. So to access future trading page, this is actually here. You can actually do futures. Then when you click futures, you can select the coins you want to select. So now, before you vision or you trade any coin, you need to understand which coins are you recommended. Maybe are they recommended to trade? All these coins you can trade them, but for me, according to my analysis, I understand we have different coins that I normally do research on it. So let me say I normally trade major coins. That's actually Bitcoin. Let me say for the case of Bitcoin, and one of the reason I'll actually highlight here is that before you highlight the coin to trade on future, you need to understand how the coin is performing, right? Like check the trading volume of that particular coin. Also check, you need to check the team behind the coin, though it's not that much necessary, but I normally recommend you first of all need to check the trading volume on the exchange. So only trade volume, you can actually choose to trade the coins with high trading volume, right? So basically for me, I normally recommend coin with at least 2 million, right? 2 million. And as you can see here, how do you see or how do you check the trading volume of a coin? So let me say this is actually BTC, and BTC here, when you select this right up here, you can see this ticker symbol BTC against USDT. BTC means Bitcoin, so here they normally highlight the coin based on their ticker symbols. So right in here, select BTC, then right down here you can see spot, alpha, you can see futures. So for this case, we want to trade these coins on future. Now I'll select futures. So when you select futures, it will give you all the coins that are highlighted on future or rather listed on future contract, right? So what do we normally consider before choosing a coin to trade on future? And as you can see, most of you might anticipate or actually choose the coin based maybe how it, if it is green or blue, but that is not a major factor to consider if a coin will buy or sell. A coin being in red or a coin being in blue does not mean that maybe it will happen or it will rise in the next few minutes or in the next 1 hour, or it will drop. So what you normally consider, first of all, trading volume is the major factor. How do you know the trading volume? Like when you come here, we have change. So change here we have you can see right in here we have this interchange symbol. Actually change symbol actually looks like reversal, right? So you have change, that's a percentage change. When you just click onto this reverse symbol, it will show you now the trading volume. So you can see now it has changed from the percentage, the way it was displaying. Like before it was this way. Ethereum, it had risen by 0.66%. BTC has risen by 5.3%. What does this mean? It means for the last 24 hours, Bitcoin has risen to this percentage. Now, for this, we don't check the percentage to determine if the coin is good for trading on future or not. We check on the trading volume. For me, I normally recommend the coins with the higher trading volume. And the good with the exchange is that it has arranged for you the coins from the highest volume to the lowest volume. Like you can see Ethereum is the leading trading with the trading volume of 3.37 billions. And the second we have BTC, which has a volume of 2.603 billion. What does this mean? It means for the last 24 hours, this coin, people have invested this fund, right? These are what it means. So as you see, as you actually go down, you find that the trading volume continues to drop, and I'll give you the reason why I normally consider the coin with high trading volume than the less trading or the smaller trading volume. This is an example. Let's see a coin that is actually up here. I use an example of I love XRP. Let me use an example of XRP. Okay, let me use major coins first. Let me use Bitcoin. When you see the Bitcoin now, this is actually the graph of Bitcoin. And just to highlight a few things onto this interface, like upper here you can see this is actually a 1 hour time frame. This is the time frame based on how the coins are trading. As you can see on the middle side here, this is, we call this order book. This order book. This is actually, you can see the number swinging up and down, right? The number swinging in red and blue. You don't have to ask yourself what is all this, right? This is actually the people who have placed an order waiting to be executed, right? And now you can see on the middle of those order book, the one with red and the one with the blue. So the one with the red, it means these are actually the sell orders. The one with the blue simply means these are actually the buy order. So as you place an order, your order will actually keep painting onto the order book until it gets executed. Now this is what an order book is. So as you can see, order book on the middle side, we have these numbers here. So here we have the one I have highlighted. So you need to know the one I have highlighted, we have what we call bid price and mark price. So this is what helps you know which coin is better for trading on future and which one is not, assuming you are considering Bitcoin. So it means a coin having a larger trading volume, it means it has many traders trading that particular coin. So in case you happen to place your order, it can be easily executed. It can be easily executed compared to the coin with less trading volume, or it can executed at the best available price. So let me say an example of BTC. This is actually the bid price. And now, as you can see right down here, for those who normally use Android like app, it normally has a flag. So here now, the one I have highlighted, the one in small here, this is what we call market price. This is what you call market price. And these two is where the difference comes in place. Now, you find a coin with less trading volume. It means that this coin, this number will have a very great difference between bid price and market price. Now, because the coin having a high volume, you find the difference is not that much big. Like you can see for the Bitcoin, when it moves to 139, it is still 139, 106, 139. You see, this is actually the difference, not that much big, because once you place an order will be in order book. You might think you have placed an order at the bid price here, because you place an order, maybe you are going to a market order, so you find it will have a difference between bid price and market price. So in case you happen that you have a very big difference, that is where you happen that you have placed an order it has executed, but when you try to look, you are already into a loss. It has a very big difference from what you expected before. So that is what it comes a difference. So you can see now how Bitcoin is moving very smoothly. When you look at the order book, bid price and market price almost the same. Let's go to the coin with a smaller volume. Like let's scroll very down and let me go to the coin with a very small volume, or very small trading volume. So I'm not saying that these coin with a small volume are bad. I'm only saying that according to my view, I normally like this coin with high trading volume. Okay, I choose a coin. Let me say a coin like NAV against USDT. NAV has a trading volume of I think 8,000.25k. So Now see the difference. First of all, see how the order book looks like. The order book is not in motion as the way you have seen the one with Bitcoin, the way it has been performing. So you can see the order book here is very constant, like it doesn't show that movement. In case it happens to move, it is moving at a very slower rate. Now we come here and look. In case you have placed your order and it is on limit order, it is waiting, you might find it is already here, but now it will not be executed until the price that is here is also appear to be the same as the one here. So you can see the difference. This one 86, this one is 60. So that is the difference. You see the price here and the price here is what actually makes the difference. But now, while selecting a coin with high trading volume, it will be executed immediately. So while trading your order, you won't be waiting for too long for your order to be executed, right? You can see even how the graph looks like compared to the major coin. So that is it, though that's not actually according to my own view, though it's not financial advice. You can actually choose to trade whichever coin you want to trade. Okay, remember this class is only for educational purposes, right? So I'm not here to promote any coin or rather anything. So I'm just giving out my personal views. So that is actually one of the things you highlight while looking into the future trading. Now let's go to the future trading by itself. So here is order book. Like when you see this other side, you're gonna you see this actually where now you set your orders. This is where now you set your orders. And when setting your orders, we have a cross and isolated margin. So for cross margin simply means in case you select you want to trade with cross margin. And by the way, you have to pay attention here because this is now where a lot of people miss, right? Where you can actually lose your entire asset without actually knowing like what you're doing. So you just wake up, you place an order, and everything goes. So remember, you can know how to trade, but these basic things is what is very important, things to do with the actually margin leverage. So first of all, let me talk about margin. So we have two types of position. Actually, we have cross position and actually isolated position. So you need to understand what are the difference between the two. So for the case of cross margin, so the entire balance in your asset account is used as a margin when liquidation occur. So your loss is the entire balance. So this means if in case you're using cross margin here, simply means in case trade goes against you, like you have opened two positions, let me say you are buying XRP, you are as well buying BTC, and you have opened a position in XRP BTC, and in case maybe by bad luck liquidation got you on XRP, or sorry on you are buying, you've opened a position on XRP and another position on BTC, and by bad luck liquidation hits XRP. So it means your entire fund, all your trade will stop there. Like for that of BTC will also be closed, and you will lose your entire fund for those you are placed for BTC position and your XRP position. That is how that is what cross position simply means. That is what cross position simply means. Then we have another margin which is now opposite from cross margin, which is isolated margin. So this one is now independent. Like you place, assuming you're having $100, you place $100 to buy Bitcoin, and maybe you place $50 from 100, you buy Bitcoin, and $50 you place for XRP. In case it happens that the one position for XRP gets liquidated, it means it won't affect your entire wallet, only that of XRP will be affected. So that is what is the difference between isolated and cross margin. So in most cases prefer using isolated margin, right? Unless in case maybe you are opening different positions, it is recommended you use isolated margin. So for my case, I normally use isolated margin. So that is actually based on isolated margin. That's actually margin. Now we are going to one of the thing we call leverage, and this is where a lot of people normally confuse. Like, people thinks this is like the gambling, right? So remember, this is actually trading, and it is not it's not a get rich quick scheme, right? So you need to understand that it has steps you need to know, or actually the procedure you need to follow before you venture into the before you gain. So you have a leverage, and now here what you need to know, different coins have a different leverage. Like for this case we have Solana. This is Solana. I have opened my Solana USDT. It has a leverage of 100. So every coin has a different leverage. Every coin has a different leverage. Let's now look at another coin like maybe BTC. So that is actually Solana. Now we look at we can look at even Ethereum. So Ethereum, you can now see when you come to Ethereum, when you click on leverage here, it has a leverage of 125. It has a leverage of 125. Let's go to another coin. You can choose another coin just on the top left. On top left, let's choose another coin like Pepe. So you see what trading volume does Pepe leverage. So you see Pepe now has a trading a maximum leverage of 75. What does this means? This means different coins has different volatility rate. The volatility rate of Pepe is not the same volatility rate of Bitcoin, right? So you need to understand how all these are actually applicable. So while trading, you need to know the higher the leverage, in case the trade goes on your way, the higher the reward within a very short period of price movement or a slight price movement. And also, the higher the leverage, the higher the loss in case the trade goes against you. So I therefore recommend you use a leverage smaller, right? A smaller, especially if you're a newbie, use a smaller leverage. Or I normally say, in case maybe you don't know how to differentiate these, just take you can use a leverage like 5 divided by the total leverage. You get the appropriate leverage might be you expect to be using for your trade. There's actually for the newbie. So trading, you need to know leverage is also a big factor that you need to actually consider while doing trading. So another thing we need to know here, we have from leverage, you can have open, short. We have open and you have close. So open actually means you're opening a trade, depending, it can be a short trade or a long trade. So rather that's actually open. Then we have a close. A close simply means maybe you have opened a trade, is running, and you want to close the trade. That is actually what you need to do. You can use close. So another thing you need to know here, now you can close the trade that is running, you can open a close, but I'll actually demonstrate this practically so you don't have to worry about it. So sometimes you find, most of you, I normally share with you maybe some signals on how to do trade, or rather somebody have given you signal to trade. So this is what normally happens. So this interface here, you set your own leverage. So you first of all come here, maybe say I have given somebody have given you a signal on XRP. I love trading XRP. But that's just on my view. You therefore need to do your own research on the coins you love to trade. So let me say somebody have given you a trade on XRP, and they say that XRP maybe it was here, right in here, so he could actually buy XRP. Okay, let me adjust these that you see clearly. Basically here, maybe has analyzed the market, they have seen XRP was here before it was actually risen. He drew the line there. Then this is actually the price you could enter the XRP. You buy at this price, then maybe you set a stop loss somewhere here, maybe because he saw the exponential moving average 9 crossing exponential moving average 21. Then from downwards to upwards. Then he anticipated maybe XRP will actually rise in price. Then he actually decided to buy XRP at this particular point here. Then he gave you a stop loss. Let me say this line down here, there's a line I've drawn here. I can actually make it to be, let me make it to be in yellow so that it gives you the exact price of that. Then the line that I've drawn, the one here, is the one was entry. So for this case, XRP, he anticipated maybe it will rise in price. So he set a stop loss just below the previous low. Then he had his buy, or actually entry point at this particular line. Let me call it okay, let me say I can name it line 1. Let me just say L1, right? Okay, let me name in capital. I say that's actually line 1. So line 1 is the entry point, right? Line 1 is the entry point. Then we name this other one, we name it line 2, say the one in yellow, right? This was actually his point where he anticipated it will be a loss. So if it is a loss, then we say we call it line 2, right? We can call it line 2. So when you call it line 2, that is actually the price he anticipated that it is it will be a stop loss. This means he anticipated that maybe in case it happens that I'm predicting this price will actually rise. Let me say he anticipated that the price could rise to the previous resistance. The previous resistance was, this was the previous resistance from the point he entered the market. Maybe he anticipated the price would be somewhere here. So if he anticipated, let me color this line. I can use another color like green. Yes, we use green, right? Now this guy came here and he said that he entered the market here. He anticipated that in case the market happened to drop to this point, let me close a certain percentage of my fund so that I won't lose my entire fund, because it happens that in case price drops to a certain point that is beyond what it is expected, your fund will be liquidated. And liquidated just simply means it will result you to lose your all asset or your entire asset, right? So this guy actually say, let me put my stop loss here. Then the guy predicted, or he anticipated, that the price, in case it happens to reach this particular level, he will actually be, the order will be closed in form of USDT and he will close with a profit, right? Now that is what happens. Now for this case, what will happen, this will be the entry point. 1870 was his entry point. This was the stop loss. This point here, right down here, was the stop loss. Then the point upper here will be take profit. Sometimes maybe he anticipates he want to have take profit 1 and take profit 2. It means he might choose take profit 2 to be somewhere up there. All right, now when you come now to setting an order onto the market, assuming you have done your analysis, you have actually come up with the best available signal of yourself. So this is actually now the signal. This is how you obtain the signal. So all this is behind technical analysis. You need to know technical analysis, do more of research, which I'll actually still cover into our coming videos, right? I think the previous class I had like how you actually understand how to trade on weekends. So of which today I just want to take you through how you can actually do this now. Now this guy have already set his orders. Now he want to place he come right down here. So this is a new account I'm using. So once he come down here, he can choose to trade with the market and limit. Now you need to understand what is the difference between market and limit. So these are now what we call orders, right? So you need to understand what an order is. Sorry, I just zoomed out to an excess level. Okay, this is what I was saying. So let me say you want now to set your orders. I was explaining market and limit order. What does market and limit order means? So market order means sometimes somebody shares signal or provide you signal and say you end up market price. So market price means the best available price, that the current price, that is it. So for that case, it will not be a pending order, so order will be executed immediately. And now we also have what you call a limit order, this one, right? For this case, I'll actually take you through market order and limit order. I know most of you are not that much advanced to all this, but with the time, I know you'll get to catch up. So basically, limit order now for this case simply means, let me say this is the current price of this price here, like up here, and this guy is now anticipating that he don't want to buy here, though he's predicting that the price will still go up. But now, according to his view, he's expecting that price will collapse maybe to some point right down here. Then after collapsing to some point down here, it will rise again, right? Now this guy chooses not to enter at the available price or at the current price. He chooses he want to enter when the price has dropped to a certain level, right? So that level, we call it a limit price. Now the guy came here, maybe he anticipating that the price might come and collapse to a certain point right down here. Can still true. Okay, let me use another line. I use horizontal array. Horizontal array is a half of a horizontal. I think he is predicting that the price it will drop to a certain point here, the one with the blue now. So which is actually 2 point. As you can see, when I draw this line, in case you happen to have confusion based on doing analysis, you can still choose to change the color so that the price still indicates. Let me use now red, so you can see now it will actually give me exact price, the one I want. I'm now using red, so you can check and see now it is 2.26. so the guy now anticipates that he wants to enter with a limit, so he's choosing, or he's actually predicting that this price, though it will continue to rise, but now it will drop to a certain level before again it rises, because market normally have that particular retracement. So remember, crypto is not like, doesn't go like a straight line, right? It has that zigzag. It has to go up, it has to come down, right? So he just now chooses to enter the market with the limit price. So he came here and say, now I want to enter with the limit price when it has dropped to 2.26. 2.26, 2.2625, 25. That's the limit price you want to enter this market. Then he chooses the amount here. Now you choose the amount you want to trade with, like, so for this case he might choose the amount you want to trade with. Maybe he adjusts based on the amount you have available balance on his end. I think I can do this practically so that you get to understand what I'm doing. So what you need to know, currently I don't have funds on my future account. You need to transfer your fund from spot wallet to future account, right? So this is future trading. It will only use the funds that are on future account. So the first thing you need to do, you need to transfer your fund from future account to spot account. But for that case, we can still use a demo. So for the newbie who are here, you can still use demo trading. Demo is where now exchange gives you a free and already funded account that you can actually practice trading with. So for this case, just to acquire more knowledge on how you can do that, so I'll actually use demo. When you click on features right up here, you have a demo trading. So just click on demo trading. Then on demo trading, it will open a demo trading page where now, just like demonstration, right, it demonstrates for you. So it is a free funded account for you. Request access. Demo trading login is requesting access to your Getter. So I can confirm. So that is actually how you can access your demo trading account, right? So it brings you to demo trading page. So this is actually demo trading account, and on demo trading account, what do you need to do? Sometimes it might give you, even like for me, you see my demo account has about $1,000, so which I can actually use and practice trading with. So this is actually how the page looks like. And now you want to trade. Now we want to trade, so I think I can now use demo because it is a practical and it is a trade that I have not planned. I'm also using this just for educational purpose. I haven't done my analysis on how to trade, so I'll use demo trading so that you get to understand better how all these are happening. So in case I happen to come here, let me say that's the current price, and somebody or the guy somewhere is choosing he want to buy or rather to sell. Okay, let me use the buying first. So this guy anticipating that maybe the price he want to buy, and this is the current price. Now this is the point where we normally collect or actually come up with our signals. So in case you happen to see, this is how you use now signals. So this is the current price of the market right down here. The guys want to enter the market immediately. He maybe say he's choosing according to his view, he's saying maybe the price will rise, and now the guys say this is actually the point the market is. He don't want to waste any time. He just want to enter the current market price. Maybe he feels the price is very volatile and it will actually rise in the next few minutes. So he might choose now to say, I want to enter the market at this particular price. And in case this price drops to a certain level right down here, let me say, let me use another color like yellow that I had used previously. So in case it drops to this point, this might be, let this be my stop loss, right? So he can still choose, let me say, let me just name it, let me name this SL. SL simply means stop loss, SL. So this is actually the SL of this guy, and now the guy is saying this is actually the SL. So basically you can still choose to advance. Let me just increase the color to 28. So this line here is the SL. SL simply means stop loss, and this guy is choosing to enter at the market price. Let me say the market price is currently there, so he might choose this. We call this now, this line now you can call it entry. So this is actually the entry point. So entry point can be a short or a long. So long, I mean price will rise. Short simply means price will collapse. Then this guy is anticipating that the price might rise to a certain point right up here. Maybe he has seen this uptrend and price, he's anticipating maybe price will rise to somewhere here above this, somewhere there. So I can use another color so that I differentiate from take profit. Let me use blue, green, sorry. So now he's anticipating, and now he's naming this color here, the line up here. He's naming the line buy, or actually target. So target or take profit. So let me say TP. So TP is actually take profit. So now the guy has 3 points: entry point, he has entry point, he has stop loss, and TP. Just as I mentioned before, stop loss is the risk management strategy that we use in trading. So don't enter a future trade without a stop loss, because it is very risky. So you need to know what are you targeting and what are you maybe anticipating to lose. Let me say this guy now wants to enter this market at market price. So he enter market price, then he place an order best available price. So market price gives you the best available price. So you won't enter the price you want to sell. Then he want maybe to use, you can use 50% of his wallet. Like for my case, I'm having $1,000. So maybe I choose to use 100% of my funds. Then now right down here, you can see after now I have entered the amount I would like to use. We have an option to TP stroke SL, like SL where you are anticipating in case it drops, it closes there, then TP, and we have entry. Entry now for this case we are using market, which means at the best available price, at the current price. That means, so we go to TP, then TP we have take profit. Take profit, he's anticipating that take profit will be, okay, what I think this graph is, let me adjust it. So take profit is about 106,832. That is actually his take profit. So that's actually what he anticipating, that his take profit will be 1,006,832. That's his take profit, 0.8. So 0.8, that is a take profit he's planning to collect. Then he's planning, in case the trade goes against him, he has set a stop loss of 105,972. This is actually the stop loss now. The stop loss, the one in yellow, this one, SL. So you come here and say now SL, he's choosing SL to be 105 978. That is a stop loss point 0.5 I think it is a 0.2. Yeah, 0.2. Now this is the stop loss of this guy. Now this exchange as well, it gives you an option where exchange gives you an option where you can still see what you are anticipating to get, or what you'll get, or what you will lose. Like when I click, after you have said that you can click advanced version right here. Advanced is next, TPSL, then we have advanced next to it. Just when I click on advanced, exchange now gives you an overview. You see what you will expect in return in case trade goes on your way or it goes against you. Like for this case, you are longing this price, you want to buy it, it means you long. Then we have TP. TP is actually the take profit. So take profit, you for this case you will be getting like 2.28% of what you are anticipating or what you're trading with. For this case you was trading on $100, 1,000. So for this case you are anticipating to get return which is equivalent to $28. So exchange gives you what you will expect to get. Then for this case also, in case it goes against you, in case it goes and hits your stop loss, it means you will be losing $11.62. So as you can see, what am I trying to talk or to do here? So we are comparing to risk to reward ratio. You must have at least, you are targeting higher than your loss, like in case it goes against you. That is what you do. So in case it happens that now you fail to set your stop loss, what will happen? So exchange also gives you an alert, or rather what we call liquidation price. So it will actually highlight for you the price. In case it goes beyond this price, you lose your entire fund. Now that is the importance of using stop loss. Stop loss now it will protect you. Like I'm using $1,000, but in case it goes against me, I'll only lose $11. I won't lose my entire. But in case you fail to place your stop loss, that simply means you lose your entire fund, $1,000. So that's how trading futures works. So I just click okay, I'm okay maybe with this order. I lose only 1%, 1.7%, it goes against me. Then in case it goes the way I'm expecting maybe to gain 2.8% of what I'm trading with. Then I just click okay. So from there, after there I have selected already. Then I'm selecting market. Remember I have selected market. I just click buy long. I click buy long, and now it will prompt you to this page where you can now see what will happen. So this is actually the margin price. Then we have estimated liquidation price. This is very important, especially when you're doing futures. So most of you or most of people normally enter the market, then they fail to recognize this. So let me say I have failed to set stop loss and the price of BTC collapsed to 685,239. Once it reaches this price, it means I will be liquidated and I will lose my entire fund. Now for me to protect myself from this, what I have done, I have set my stop loss. So my stop loss is now, for this case I'm buying, is above the liquidation price. So it means it will actually reach my stop loss before it reaches liquidation price. So now my stop loss will protect me from losing my entire fund. So that is the importance of futures. So for this case I just agree and confirm. I just click confirm. So once I confirm, it is executed automatically. So when you come right down here now, you can now see position. So position simply means it is already executed order. So here in position, remember I have entered the market with the market price. So in position, it simply means it will showcase me if I'm gaining or losing. So in case trade goes on my end, or on how I expect, like in case now it, for this case I had been longing, in case now I long and it goes the way I expect, I'll be in profit. Like here it will indicate in profit. In case it goes against me, against the way I expected, maybe I have bought it and it collapsed, it means I'll be in red, right? That's what it means. Then here as well, you can check and see stop loss, your entries and all that. Now in case, let me say trade has actually gone the way I'm expected, and maybe it has reached a certain point where I feel like maybe it might collapse and I'm in profit, I can still choose to close the trade. Close, I can still close. So when you close, you can close the running position. So remember, you close the running position but you cancel the order. So that's how you can actually trade that's how you can trade that is how you can trade by use of market order, for the case you are buying. For this case, you can still cancel, you can still close the running position. Like up here we said, your opening position, you can still close it. So basically you don't need even to close from there, you can still come right down to the running position. So right in here you can see position, you see position, then you can still close the running position. You can choose, in case you click you want to close on market, it will be closed at the best available price. That will market will close. In case you're in profit, it will close that profit that you are in. In case you are loss, it will close with the loss. So because of time, I'll actually happen to close this, so I demonstrate for you how to do limit order. So let me close all trades. I just click close. I close, so it will close with that loss. As you can see, realized loss has been indicated there. That is it. So this is actually demo account. It will show you the account asset, wallet balance and all that. In case you are using your real account as well, it will show you all these. So let me say I want now to have a limit order. So I choose limit. I'll actually come here and choose limit. So when I choose limit, now for this case I want to end up at a limit price, so I'll still use the best, the one that we have already marked. So let me say for this case it has dropped. This is the limit order, my limit order entry point. I choose the entry and TP. So entry for this case it was 106, sorry, 106 to 37.3. so I come here 106. I think because of this is confusing, I can choose this to red so that it first confuse me, so that the price gives me now in red. No, yeah, great. So I come to limit, but now when you click limit, it will require you to enter the limit price you want to enter. So for this case, the limit price I want to enter 106. I want to enter 106. So 106. It is 106. 237. Now this is what you need to master while choosing limit order or trading with the limit order when you want to buy. So sometimes you might enter limit order, but you find in case of it being waiting for to reach that particular price, it is executing immediately. What does that mean? It means for the limit order for buy, you must buy below the market price. Like currently market price is right down, it has dropped to previous point we had marked. So your limit order must be below the market price in case you want to buy. In case you happen to place your limit order above the market price, it means it will be executed at the current market price. So for this case, because you want to buy, we can adjust our limit order to somewhere down below the market price because you want to buy at a limit. So it means we are now right down here. Because it is in red, let me change now the line in that color. Yes. Now you want to buy at the lower than the current market price. It means here you are anticipating that it is market price here, but you're expecting the price will happen to collapse to a certain point before it rises again. Now for this case, what you do, you enter the market, you enter the limit. So the limit must be below the current market price in case you are buying. But in case you are selling, it's now the opposite. You are shorting the price. In case you enter the short, the price, it means you are expecting it will rise to a certain point before it drop. It drops. So for this case now, you say the current market price, you want to enter at the limit price 106, 116, 106, 116. That's the limit price you want to enter. Then you anticipate maybe to use your entire fund in your balance, 100% of your funds. 100%. You can still enter in terms of USDT, no problem there. So I just choose to enter that. Then I say TPSL. So don't forget TP stroke SL is a risk management strategy. So you come here and say TP stroke SL. TP is 106. So TP is 100, sorry, TP is 106, yeah, 106, 832. So we are just using the previous TP. So 106, 832. Then stop loss, you are anticipating to stop loss of 105, 978, the previous one, the one you had already selected. So 105. I want you to know the difference now. You'll get to see the difference between limit and market in terms of execution. So 105, 978, 978.2. So that is your limit price. So for this case, you can still click on advanced to see what you will be getting or what you will be using. When you click on advanced, you can actually see you are longing this price, and as you are longing, we have your expectation. This is now your expectation. So for this case, you're expecting, in case it goes on your way, you can see when the last price hits your TP, the position will be closed at the market price to take a profit, and the essential and the estimated PNL will be 30. So for this case, in case it goes on your side, you will be gaining $30 return, right, which is actually 3% of your portfolio. Then it happens, it goes on your against you, what will happen? You will be losing 0.8% of your portfolio. So it means you'll be losing only $8. So as you can see, I'm trying to maximize the return as I minimize the losses. I minimize the stop loss, or rather the losses, right? So for that case, I just click confirm. So when you click confirm, you have already set, you have already agreed with that. That's actually just like an agreement. So what you do, you're buying. So when you buy, you just click confirm. And now for this case, it is a limit order. Simply means it is an order that is waiting to be executed. It will not execute immediately like market order. So for this case, you can see now it is a limit. Now when you see position, we don't have a running position. Once it is executed is when we will now have a running position. So for this case, it will just be a limit. So we happen to have position is 0, but now open order, we have an order. So remember, this is order, it has not been executed. So therefore this order, you can either, in case you find it fails to execute, you can still choose to cancel, and it has no charges on that. It has no charges, so you can actually get to see. So what will happen here, this order will only execute if the price drops to touch the place you have placed your limit. In case it drops is when now it will be executed. So for this case, it is a buy. It might execute, come execute, then rise again. So maybe you are anticipating it will drop to a certain level and then it will buy again. So that is how you can actually choose to buy or whether to do that. So that is it. So you can still choose to cancel, because I want to demonstrate something else. Let me just cancel the order. So when I cancel, you can see order cancelled. So now let me say you want to short. So shorting, or actually you are anticipating the price will collapse, is now opposite from what you have been doing. Buying is opposite of selling. So you're anticipating that the price, current price is here. Let me say current price is here. Now you're anticipating that the price will drop to a certain point here. Now for this case, this will be your TP. So this point right down here will be your TP. Then you want to enter at the market price, where the price it is. You're anticipating in case the price, let me see where the previous resistance is, but still showing sign of rising. So let me say you want to protect your fund. You want to protect your fund when the price goes beyond this level. You protect your fund. Though it is risky, it is still showing me that it will actually rise. But this demonstration, and I'm using demo account, though I don't have a problem. So this is now your TP. Now your SL will shift now to this point here. Then this will be your entry point. Now you can see the difference, right? Now you come right down here and say you want to short. So you want to short this market. So you come, maybe you open market order. For this case, remember you are shorting. So you enter market order, it will execute at the best available price. Then you enter the amount you like to use. Let me say you want to use maybe 1000 or other overall funds you have, 900 currently remaining with. Then I check TP stroke SL. I go to TP stroke SL. Now one thing you need to remember here, you need to know you are shorting the market, right? You need to know you are shorting the market. So you can still your TP stroke SL. Okay, you can still click on advanced. I like clicking on advanced to see. So when you click on advanced, it will actually showcase to you what you're losing or what you're gaining. Now for this case, we were doing long. For this case, we are short. So you select short. So for short, you enter there. You enter now your expectations, right? So you have already selected short. Just okay. Then you come here. Let me enter. It was actually you are entering market. Stop loss, take profit. You are anticipating to be 105. To be 105, 317. 105, 317. 0.1. Then stop loss is actually above here. I think I can change the color so that you see clearly. So let me use another color like purple, right? Yeah. So take stop loss. You're setting stop loss right above there. So stop loss is 106. So 106, 319, 391, 391.9. So that is actually your stop loss. Then for this case, don't forget you are selling. Okay, even though when you click buy, it will not be executed. So it is a reverse order, so it will fail to execute. So you need to click short. So I click short, and it will give you the what you have to have. This actually like a contract, like agreeing to the terms and condition. You are buying and you are shorting, you are using cross. For this case, I'll be using cross because I'm only opening one position, so it will only affect that particular position. So you have amount you are expecting, you are using this amount. Margin, this is actually the margin. Margin simply means the total funds of USDT you are using in release and line short. This is actually, we call it collateral. You are collateral now, right? So that's actually the market price of Bitcoin. You are opening at the current available price, so that's the market price. So liquidation price. So in case it happens that I fail to set my stop loss and price happen to rise to reach 127,000 and 83.01 USDT price of BTC, it means I'll be liquidated. Simply means I'll lose my entire funds. So you see how important is stop loss. Then I just click confirm. So I click confirm because I have entered with the market, it will execute automatically. So the trade, I'll have a running position. So this running position will keep showing me. In case it goes on my way, I'll be in green. In green simply means I'm in profit. In case it goes against me, I'll be in red. So you have to place an order and wait for it to perform, right? And wait for it to perform. So I think that is it. Okay, let me now talk about you want to do. I can cancel these because I'm using demo. So as you can see, okay, before I cancel, you will see when it goes to, when you're in profit, it is showing red. Even here it will actually indicate the profit amount you're in, and you can still cash out the way you feel like. So basically we are having, I was to talk about still limit. So now for the case of limit, in this case it's also just the same thing you've been doing, but now for this case you are shorting. So let me say you enter the limit price, like this price here, like you can still click here, then you enter your TP. Your TP, you are anticipating that the price will rise, will drop, you'll drop to 106, rather 105, 105.37.1. 37.1, that's actually your anticipation. Oh right, what is this? 371, 317, right? That is it. Then stop loss, you're anticipating that in case it goes against me, let me do this in case it goes against me. Let me lose only. Stop loss, we had the one in purple. Let me say 106, 106, 391, 391. All right, 106,391.9. So basically that's the stop loss. You can still go to advanced to see what you're doing. So why is he saying the price amount are required if you want to? Oh, I couldn't, we had omitted the price amount you want to trade with. So because we had a running trade, I cannot place a running trade because I had used my entire fund to place the previous order. So you can see this now order running. So I'm currently in profit, and profit will actually showcase here. Sometimes people say I'm in profit, but still when I see on my entire balance, I'm still it's not the same as the one showing as the on the running order, simply because future trading normally have a trading fee, and you need to understand any trade you undergo or you don't trade the future trading, you'll have to incur a fee, right? You'll have to incur a fee. So I may cancel this trade. No, when I close this trade, I close with this profit. I'll close with this profit, right? I'm now in $1 profit. So I can choose to close the profit, but the best way to close the profit, you can choose to close with the limit or market. So when I just choose market, as you can see, it will execute close at the market order, estimated return. It will actually show you the estimated return there. Then do not show this reminder again, it will show you then after that you can just click confirm. So you'll be closing that order, and it has automatically closed. So I have closed the entire funds, that the profit that I have accrued at that particular moment. So this case, this is what we call scalping. Now we are just scalping, right? Scalping. So we enter now the funds you want to use for this trade. Remember we had already set for limit, so we had already set for limit. Now for the limit, we are just want to short. What you need to know, when you set for the limit, you have to set a price above the current market price. What is, first of all, let's confirm where is the current market price. 106 to 30, 106 to 44. This is the limit. It is above the current market price, so we can still choose to sell. So just click short, confirm. So when it's short confirm, it is now a limit order, is not yet executed. So when you come right down here, it is a limit. So in case price rises to that particular position, then it will now be executed. What is the advantage of limit order against market order? The advantage is that on market order we have what you call slippage. Slippage simply means executed price, the difference between executed price and executed price and the expected price. So let me say you have selected this as your expected price, and price happens to execute at the order book price, at the mark price. So sometimes we have variation in order book and mark price, especially when somebody actually buys, difference between the volume of people buying and selling. So it might end up executing at the best available price for the case of market order. Then you happen to have that difference. That difference is between expected price and the price unto which the market was executed is what you call slippage. And sometimes you find you are in loss though you expected to be in profit. That's simply because your order was executed at the price you weren't expected, and that's what you call now slippage in future trading. Thank you guys. I think that's actually the end of this feature session. I just wanted you to know how you can actually trade on futures. You need to understand this is actually how, you know, people tell you I'm earning within a short period of time. This is what they normally do within a very short period of time, and you can as well do this. It's very simple, but you need to know it takes time. It takes you need to understand that it is a procedural thing. So you need to know how to understand the market. You need to identify, to do your own technical analysis. Remember, today I've just been touching how to do features. I haven't talked about technical analysis. So we also have what you call technical analysis, where you can do your analysis to come up with the best available signal for you. Like for me, I do personal analysis. All right. Thank you guys for those who have been live. Remember to subscribe. Right in here we are going to be looking into very comprehensive trading signals and rather trading strategies. So remember to subscribe, and we shall meet on in the next week. Bye bye guys. Have a nice evening, have a good night, have a good morning.